us, and today's distinguished speaker, CA Varun Nirmal. Welcome you all for this study circle meet, where the series is a continuation of what we have started as Think Global and Serve Global. So now, today we are going to talk about what are the professional opportunities for CA professionals in USA. So basically Think Global and Serve Global. So today's focus is on USA. For this, we have a distinguished speaker, CA Varun Nirmal. I would like to welcome him with a book. So in today's world, as we all know, the whole globe has come at our hand. So through the technology and through the right connects from India, from Bangalore, we'll be able to serve global, serve US. So with this background, it is my privilege to introduce today's speaker, CA Varun Nirmal. He is a techno-global chartered accountant with more than 2 decades of global experience, coupled with in-depth experience on improving accounting or tax processes through technology. Varun is a CA and CPA with more than 22 years of professional experience in handling international accounting, income tax and advisory functions for India, US, UAE, UK and Canadian clients. He specializes in cloud accounting, US taxation, US GAAP, training for cloud accounting and its implementation engagements. He has consulted with various accounting software and KPO companies for implementing finance and accounting processes offshore and on cloud for SME clients. He has worked with Intuit QuickBooks as head of QuickBooks Pro Advisor and training program. He is a certified QuickBooks Pro Advisor for India, USA and Canada. He has also served as a committee member of International Affairs Committee of ICI. Of course, he has been a speaker of topics related to cloud accounting, outsourcing and US taxation at various ICI events including Bangalore branch. With this brief introduction, I present before you CA Varun. Over to you, sir.
First of all, I would like to thank Bangalore branch for inviting me particularly, and at least whatever knowledge I have, I can actually share with our peer members as well. Particularly on the US, the series is going on is basically on Think Global and Serve Global as well. But I would say that currently on the US side, whatever limited knowledge I have over the past couple of decades and where I worked as well in US as well, I will try to share and hope it at least enlightens the all of you on that one. One is like, it's not about what is the future of profession look like. Basically, we are here to talk about what are the opportunities which are in present right now and how we can tap them. And for that, when we want to tap them, particularly, we will also, today, we will go a bird's eye view of US regulation, which is US taxation as well, where you will probably, I'll give you a bird's eye view of how the taxation works in the US particularly. Accounting is more or less similar, but I will talk more about the compliances part, because that is the thing which probably may be the need of the hour, which I see that the demand and supply wise, that is where it is most of the opportunities are lying in the compliance side right now, particularly from the US side of it. So as you see, we are actually going to talk about the trends in accounting profession, how most of us if we are following on Twitter or even ICAI, few of the seminars as well, we are actually seeing what are the top 3 or 5 trends which we are actually going through right now. We will talk about the opportunities and then which are the global market to serve, which anyways this series is taking care of. But at the same time, specifically focusing on US, we will more go into US market opportunities, why it is we should actually go more deep into US. And lastly, basically when we go into that, what are the areas which we actually on the compliance side, which we, for that it's an overview of that. So to quickly move into that, so I probably over the next couple of hours or so we will go into that, but I want to just briefly touch upon the trends. If I see, these are the globally as chartered accountant profession, as we are actually evolving, right? We see that the main key trend which are over the last 3 to 5 years, in fact over a decade, but last 3 to 5 years it has been amplified, are more about rapid pace of technology, which is the adoption among our professional. AI, which is irreversible. In fact, I keep on telling that in the history of entire human mankind, there are 3 big innovations which has happened. A is electricity, invent of electricity. B is internet, which was in the late 90s, and C is AI, artificial intelligence, which actually is rapidly going to change in the next 3 to 5 years how the profession we are actually going to work on. Thirdly, and because of that, how most of the globally accountants are, as a chartered accountant, it's more moving from assurance to advisory. When we say assurance to advisory, means all the some of these auditing and all, those may we'll come into that one, that what all tasks AI can actually automate. If they can automate, so one thing is that AI will automate many tasks, but judgment will be with us. So that's why we probably the advisory services will still be there. So, and that is where we move, and global people are moving into that. And because of that, what is the global? We are going global is one world as one country. If you consider world as a one country as such, rather than let's say India is one country. Now, if you zoom out and put world as one country, then you will see the opportunities which are coming up in that one, wherein you will have clients in multiple locations, like instead of multiple states, you will have multiple countries where you will have your clients in that one. So, quickly on the technology adoption, right? In fact, for the opportunities when we see, is like while businesses are adopting technology and we as chartered accountants are also adopting technology as such, where the opportunity lies is giving our clientele which are the right technology to adopt, and that gives us, that is the business's right tools, or how the AI is also one thing, right? So AI implementation as a service, people have actually started doing this as a AI implementation also. So that is opportunity, one of the opportunity which as a chartered accountant profession comes in that one. Now if we, what are the challenges? Challenges mean if we don't adopt at that pace with which AI is moving faster, then we will actually be lagging behind, and we probably, the growth will come down to like a zero growth or maybe a nominal growth. Instead, this gives an opportunity where we have probably going to scale, or we can actually scale our practice multifold because of this particular trend wherein we are actually going global. Means we can actually go global because of the AI. Now, AI technology, B is the adoption of AI, which is happening at a massive pace. What it does is that it automates many of the tasks. So we probably maybe always be occupied in a mundane task of maybe account finalization of account, or GST filing, TDS, or even regular auditing and other stuff. Now AI actually can do. I am not sure. Most of you would have heard about Claude, right? Claude AI does. ChatGPT is one. Claude is the other. Perplexity is there. But Claude does wonderful. Actually, all your categorization, everything. If you do that with banks, like any of your bank statement, if you give that, it will give and prepare your financial statement as if like an accounting software will do it. Because of this particular thing as well, whenever we are seeing, the trend in the US, which we are seeing, is that many of these software companies which are SaaS based, they are actually facing the risk of kind of that whether we will get eliminated or not, because what Claude and Anthropic and they are doing it because of that one, because they can actually literally actually those agents can run for that. I have one particular client who actually is a single member and he's working, he's running a marketing campaign company, I think in Florida. So he had like one person there and two person in India, and with that they are actually doing almost like how much $11 million business with four people, $11 million, and they have actually he is having like he has developed over a period of last 3-4 months some not 3 months 4 months or plus so they are using this Claude, and that does all their one particular person will do all the email campaign, the other one will be social media. So their social media specialist, instead of hiring like a $3,000 to $5,000, they have hired this Anthropic for $100 on that. So that is how the way it is getting changed. Now coming on to that, for coming back to our profession, right? With this particular trend, what is happening here, we cannot this actually opens up our horizon wherein we can serve not only, let's say, sitting here in Bangalore, New York, anyone we are running payroll for companies in US also, we are running payroll for companies in Dubai as well, or in UK also. So you can actually, so if and that would be the future wherein we would be serving global only, and anyone who will be serving global and they can they will be probably slightly ahead of the people who are not serving global in that one. So global is the need of the hour. So I would not say that is a kind of a we in the product business we call it like a P0. So it is like a kind of bare minimum which we should be actually doing it, that anyone whenever we are serving now, global is the main thing which we should be doing. And now coming back to opportunities, particularly on the global side, right? So we probably, if you see the first on the left tab, right, we are doing bookkeeping or accounting and auditing of services which we are doing, or many other tax compliance serving which we are doing it for regular clients here as well. The big opportunity lies in giving virtual CFO services now. What happens is there are one of the things which you probably may have heard, that many GCCs are opening up. So let's say from US, UK, they are opening up their global shared service center here, or capacity building center they call it, right? But that is nothing but a cost center only. Now for that, they would need anyone who will be managing end-to-end. So they don't need to hire like a local CFO. They will hire a firm or a chartered accountant firm who can actually do their payroll, they can do their compliances, and also work with their global team to give the consolidation and other stuff as well. So that is, and if they can work on the compliance side, they would be more keen to it. So that if there are 10 people who are probably giving a tender or a proposal saying that we would be able to do your accounting, payroll and all the CFO services of India, but at the same time we will be able to help your US thing as well on the compliance side, then if there are two people who are giving India and US combined, they will actually prefer that, and then that is an opportunity is there. The second opportunity, which is actually more like we are looking at GCC coming in, right? But second is like global advisory services to existing clients. So many of our clients or many of the clients might be manufacturing units. They would be doing export of services as well. Obviously, they will start exporting as they expand, right? So they will start from one state to multi-state. From multi-state, they will actually go to multi-country also. When they go to multi-country, in fact, we should push them that okay, why don't you go into multi-country? This is the country where you will have a bigger opportunity. Just to give an example, that one of our clients based in Vapi, so they are having obviously corporate headquarters in Mumbai, but so they were selling few items, like production items, like what they would be having a factory and they are selling items directly and exporting it to US. Now, what happens is that when they want to take export is going on, like almost like 40-50 crore export is there. But apart from that, when they wanted to massively grow in US, then there came if there was a contract from Walmart. Walmart said that we need to work with a domestic company, not a foreign company in that. So now that is where the requirement came in, and because of the domestic, and when we are looking at the regulation, there are, if you want a government work from the US government work, or you want actually a big multinational companies so work from the US as well, you need corporation there as well. So when we are incorporating particularly in, so what we advise is basically, if wherever, it's not that only US is, I am giving you an example because we are more privy to that particular thing. But when you are open up a company in the US, and then for a client, that same, if they are giving say X dollar or X rupees in India particularly, because there are so many people who have to do that, for US they will give you 5x on that, because US is unknown, but we are actually the one, if we are giving them confidence that we will be able to take care of all your, and they will give 5x as well. And right now we have set up their warehouse also, and it is actually becoming for exporting, right? Because it was going on a shipment basis. Now they predict the demand, and based on those Costco and Walmart and their demand, they are actually exporting to their own company, and from there local distribution is happening. Because Amazon also has a condition there that few of the, I think Walmart, Costco and Sam's Club, they have that you need to have, we will be buying only from the local vendors. So those opportunity is basically, this is one particular, this is US, but there may be opportunity in Singapore, Indonesia or Australia as well, where there may be a demand for opening up say any restaurant, if they are into a hospitality business or a hotel business, in fact real estate as well. So those are the opportunity, like global advisory services to our existing client. That's another opportunity in that. Now, which are the markets to explore particularly, right? Like we know that these are the world is big, and now I always mentioned in my talk that I have at my home as well and at my office also, I have like a world map. The world map is the one where if you keep that, then you keep on looking at that thing that this is our area of operation where we can actually, even though see Indonesia we may not be knowing, but how will I actually know? AI and tools are there which had made us, right now we have made very easy to actually get into that, and also connecting with the peers over there. So maybe if these are the 5 countries where we focus, and obviously we focus right now, Australia and Singapore we are not focusing on. We are our firm as particularly we are focusing on the first 3. The other 2 we have not focused yet, because that's something which over time we will see on that one. But if we see, these are the 5 countries majorly to where your main growth will come in. Now within US as well. Now why we are talking about US particularly? US, I am not sure if you follow on Twitter some accounting today magazine or so that, and they will keep on, or some of the CPAs also which are there, right? That's and so they say that in the US there is a acute shortage of accountants. This accounting is not, because when most average CPA firm has like 56 years, the CPA firm founder partner would be about 56-57 years right now, and the new people are not joining in this particular field. So many of the CPA firms are moving out new people are not joining in. So and then that's why it is very difficult to get talent, or particularly on this. So that's like there's almost like shortage of 300,000 accountants, and in India against that we are having chartered accountants which are supply is decent enough, wherein at least 6.6, 7, 8,000 CAs are there, so average 15,000 in a year is new fresh accountants. And obviously apart from that we have almost 1.2, 1.5 million which are non-chartered accountant, but who may have cleared intermediate, or they are in a final stage also. So because of that, right, there's one is the shortage of accountant. And I'll put it more in that the Indian chartered accountant, the rigor with which we go through, that is also a strong skill set. And third thing is on the cost arbitrage. It's like 95 to almost like 95, 1 to 95. So then we probably will have a bigger leverage on the currency swap. And fourthly is the time zone, I would put it, because for them it works out better that someone works in the night and they will work in the daytime. So most of the average here we may be calling like this, like okay, we are having a firm of 100 people or 150 people. In the US, an average size, in fact, we will say that we are I think I have seen that. Like my own colleague or friend who was with me, he's running a decent size firm in Chicago, Schaumburg, and his total staff members are 15, and in India they have kept another 12 or 13. But and they are serving almost 4,800 clients. 15 people are there in that. But it's not like that in US they are having like 100 people. Mostly 20, 25, 30 people is a decent size firm. Because as I said, right, A shortage and then the cost is also important. They will keep on increasing in India particularly. So in India in the sense because of the cost thing and skill set available. Now, which are the opportunities primarily? We know that bookkeeping, everyone might be doing that, but
will you share this PPT?
Yeah, it is shared already with the branch.
Thank you.
So we have bookkeeping is there, accounting and bookkeeping, which is which has been going on for a couple of decades now. Which, if you go back to like on the west side of west coast of India, right, which is more like Gujarat or Rajasthan and those, you will see that there are many people who are doing accounting for 2 decades. Taxation has started off late. Taxation, in fact, almost more than 10, 15, 12 years they will be doing it. Other thing is, you probably, when I mentioned about the opportunity, right, which many people are not focused, particularly when you are looking at outsourcing means you are actually looking at accounting and tax work. But then there are incorporation services. Now, incorporation services may come from mostly direct client. If when I mentioned about that, the same client where we were talking about Walmart or Costco or anything from India, they want to actually open up something. And in Bangalore, we are seeing many of the existing clients mentioning that we want to open up a incorporation in the US as well. So, incorporation services is something which very less people are focused on. It is not I would not say that it is a very margin-oriented business particularly. But once you get that client, if the client is yours, you can actually give them the annual compliance and annual accounting as a package as well. Income tax compliance, payroll is something which is there, but payroll there are tools also available. In fact, tools are there. But payroll as a service also, just like in India. Sales tax is an aspect where also US has a state-wise regulation. Sales tax is more like our erstwhile, before 2006 VAT came in as well, the sales tax was there. It's similar to that, wherein Karnataka may have separate sales tax, Tamil Nadu will be having, Andhra will be having, Gujarat will be having also their own sales tax. So every state has their own sales tax and it is primarily on goods. On services there is a specific on that. But so sales tax is an opportunity, but it is not a big enough opportunity. Big enough, and even there are tools which are solving it right now also. But the sales tax, because it is not applicable out of 100, it may be applicable for 10, 20 or 30%. When obviously mom and pop stores and convenience store, motels, and if you go, their sales tax is applicable. But in our clientele, we have hardly seen sales tax being a bigger lever on that one. Financial statement and schedule as per the US, because they may need, if they are going for a review or so. You in US, audit is not a mandatory thing. Only it is more about when investor is requiring, or when banks, when they go for bank and bank says that give me a review report. So those review report, when we are doing accounting and reporting, we can actually prepare it. So that is the opportunities which are there in the service area, which you can probably do. But for us, primarily, if you focus on the key takeaway is bookkeeping accounting, but bookkeeping accounting, I see in the next 4-5 years will the margins will be very thin in that one, because there would be AI applications which will do the accounting automation also. Review and all would be that is more about review, and report preparation might be still be there. So that is one. Incorporation services are there, for that is more for the new to franchise, I would say, new businesses also. And income tax compliance, I don't see in the next 3-5 years in the US at least getting automated. And I will tell you the reason behind that. I have worked with multiple CPA firms on the West Coast, East Coast, and I was working with Intuit also. Earlier was the tax. They have the tax software preparer as well, and they have their software on the West Coast, which is Pro Series, and which is then there is Resort is there. There are Drake software are there. All these software are desktop based, not online. From desktop you can e-file and other things there, but they are all, and it is still a huge manual process. So because US has a federal plus state, so federal may be automated slightly, but the state is not automated, so your return goes together. But so that's why I see that it will be a still long way before we actually go into the taxation level. So that's where the tax opportunity will be there.
Excuse me, what are the skill sets that which are required for coping up with this worldwide opportunities, and how long time it takes to acquire the skills, build the skill, and what is the gestation period that is required?
Okay, so
and we should not always project ourselves as a low cost economy. We should have the skills and project as a strength of intelligence,
correct,
not as a low cost.
Okay, so I'll mention about that see, ultimately there are two aspects which we talk about. One is cost arbitrage, and another one is skill. Now, cost arbitrage will not only work. If you see, cost arbitrage means and that is precisely the reason why here from US there are almost 35 million returns which are 35 crore or so, right? That many number of tax returns are filed, federal and state. In India, the taxation, US tax return services from CPA here is still at maybe a 10% or a 15%. Accounting and all, they are outsourcing it. Taxation, they have not outsourced fully, and one of the reasons which they say is that it's not that okay, I will get it done at $10 or $12 or so. If they are willing to pay, if the skill set is there on that one, where we will be able to analyze, let's say, R&D deductions, similar to India thing on that one. So that is there. So cost arbitrage is a factor, but it is not the factor that will only decide for the weather, or particularly on the compliance side. It may work on the accounting side as well. Accounting side, they will say that okay, we are given. I will give you example that there are people in Ahmedabad, they are working at $8, $7, for bookkeeping, accounting. For taxation also they are offering the same. But what people do is that okay, they are working, we give them the preparation of like folder management and all other stuff which are there when they will do that. But as a chartered accountant profession, right, what we are, when we are saying what are our opportunity is basically when we have to manage them end-to-end compliance. Compliance, when I say, is that okay, oh, you are in California, now you are doing business in Florida as well, so now whether you will need a registration, separate registration or not, or as a foreigner, like just like how from here to Delhi, if they are doing what are the regular compliances, those are the opportunity which we perceive on that one, and that is the skill set. Now coming on to the skill set side, to achieve that, right, what we are going to do is you probably will, we are over the next 1.5 hours after that, right, we are seeing, I am giving you a bird's eye view of how all the taxation regulation are there. This is more of a per day. Now within that, right, if you take 2 months, in fact, I would say not 2 months, 3 months, like at 10 to 12 sessions of like this, because the same what I am going to present, right, in institute in Delhi, I had actually presented for a certification course, but we have a training like a 10-day kind of, if you conduct those 10 days, which is like a 3 month thing, you would be well versed with the, I would put it like on a scale of 1 to 10, you will be well versed with scenarios wherein any of the client will be able to talk everything on that one, except there might be some small nuances might be here and there, which you, as you apply your on practice, if you apply it, right, you will keep on adding on that one. But to acquire that skill set, I would say 3 months weekend session is more than that would be well enough for that. And I say with utmost sincerity, because the third year BCom students in Mount Carmel College also I have gone and taught taxation, but not at chartered accountant level, at a preparer level. What we are doing is we want to ensure that we are aware about this particular thing end to end, from a where if you have to review and talk to the client, that's where it was going. Yes, sir.
See, basically, I am trying to put across the point of view from the current practitioners at Bangalore. The real challenge for somebody who has put in 4 decades of practice, myself, I find that the market is not giving a standard or regular supply of article clerks or people who are wanting to learn the trade. Nowadays we have people who come and ask us to teach them the tricks of the trade. I tell them, learn the trade, tricks will come on their own. They don't want the trade. Directly they want only the tricks. Maybe like fast food, I am not sure when I say this.
No, you are right, but in our actual firm, right, we are not taking articles.
Oh, really good.
Unfortunately, we haven't taken article. In fact, once they finish off the articleship and they are working as
Paid assistant.
paid, that is what we are.
You attract that crowd.
What are the risks and the legal liabilities we are exposed to when we take up a acceptance of a US contract?
Okay.
So it should not run into millions of dollars that only all our inherited assets should.
Yeah. So as far as risk is concerned, that one, right? Risk means on the account, there are 2 aspects. One is accounting and the other one is the compliance side. On the compliance side as well, when we are preparing, let's say, return preparation and all, in the contract, there are standard clauses are there. Obviously, there would be 2 things. One would be with if you are having direct client or a company, direct company. B is accounting firm is there. So when we are working with accounting firm, the liability is substantially less. Only downside would be that your contract they will not give the work. Because that's a more renewal and that will not happen because after preparation, right, or preparation and internal review also, they will also review it and then file it. One, like they will still glance through it, so responsibility is that one. Still in that case also, the contract clauses are put in such a way that it is like the typical contract clause, like $10,000 to $50,000 liability, they put it as standard in the contract, and those are insured through a. If you take that, like you can actually take a business liability insurance, which will cover that particular thing. But having said that, we only encounter with has happened particularly, it may happen is that the renewal may not happen. That is what the practicality will happen in India because they are in US, we are in India. Only unless and until it's like a huge kind of like multi-million-dollar contract and all, right? Then there might be the risk will flow into that particular wherein obviously if you are doing a kind of how Accenture and all those people are doing, right, on a runs in hundreds of millions or no, then there might have a legal liability. But with CPA firm or direct client and other stuff, there would be the risk is that contract may not be renewed. With direct client, the thing would be that direct client is if there is a company where we are managing compliance, on that it would be we have put it in this particular covered by insurance. But that I have seen on 10 to 50 cases.
Are there any websites or forums or chambers where empanelment or something that can be done?
Like Upwork kind of thing, is it?
Yes.
Yeah.
Empanelment.
But are there any websites where empanelment happen?
Yes. Indian Embassy or Chambers of Commerce or any other websites where the Indian FC can empanel?
Empanelment, I'm not seeing. Where I see is that this as an individual, I mean there are many forms also. Upwork is for individual freelancer. Rippling is also there, but they are like, but what they do is, there are many accounting firms who are actually putting themselves or empanel themselves as a profile. Right? Even QuickBooks and Zoho also has the same thing. Zoho Books and they also have empanel. You become their advisor and they will empanel you. And if there is any work, it is not like that they will give work, but they will be probably putting forward the profile and people can look at and then contact you also. They give just a platform. Upwork is where they are, there are some projects are there and you have to bid for the projects.
One point which I saw looks like missing. MIS is a huge field.
Yeah. So that's reporting.
Yes.
Yeah. MIS, so accounting and reporting is covered the MIS.
Including MIS.
Now, if we see a company, right, let's say, what would be a sample annual, let's say a corporation in the US or a company in the US. So this is what their compliance calendar would look like. Compliances would be looking like, I said. There are federal tax return will be there for a company, and then there would be state income, that is federal tax return means income tax return, then there is a state income tax return. Secretary of State report is there. So Secretary of State report is nothing but, so this is basically what when any company comes in for a like inquiry, and when any company comes for inquiry that okay, we need to do our US compliance. So these are the compliances are there. There may be few things which may not be applicable, but let's say if they are not having payroll employee only, then those payroll return will not be applicable. But other things will be there. So US has income tax, and then there is a federal income tax, and there is state income tax. Secretary of State report is, consider this like a MGT7. It's like when you are registering with ROC Karnataka, ROC Delhi, but you have to file one annual report showing your annual activity. That is just like that. Annual contractor return, which is 1099, you have there, then payroll return. So 1099, NEC we will cover in my other thing where we are going for the regulation overview. But 1099 is nothing but Form 16A. 16A and 941 is 24Q. Those quarterly TDS return which we call it. Right? Annual W2 they call it means Form 16 filing. So these are all, whatever we are saying for Indian company, you can actually put it similar thing in that. If it is applicable, those are applicable, and then there would be, some of them would be annual. Now, this 5471 is subsidiary holding company information return, which is our 92 also you can actually, because when we are putting a parent company thing, right, in that India, like if you are having a subsidiary or a holding company outside of US, then you have to give the information about that. That is the thing. Sales tax compliance if applicable. Many of the services does not have sales tax there because it is a very state specific subject. It is not a federal control thing. And registering in new state. Now this is would be like, okay, I am having 10 employees in 10 different states. Then I have to register in 10 states. That's how it would work like that. And filing of stock amendments with Secretary of State, like my authorized capital changes from 1 million to 5 million, then I have to file those things. So this is would be like need basis. So basis that we give a proposal that, okay, first we say whether this is applicable or not. If they say that these are applicable to us, based on that you give a package that, okay, this will cost you maybe $5,000, $8,000, $10,000. This is one compliance checklist or as a maybe. And if an individual comes in, right, individual will have a salary, then interest, all the same sources of India income, right? India we say rental income, partnership, if there is any share of profit from partnership or proprietary business they are doing it, then capital gain, mortgage interest, tuition fee or dependent. One only thing in the US individual income tax return we have see is that there is an option to file together. So husband and wife files together, they call it marriage filing together. So they have to give, they file, generally most of the people file marriage filing together because then your slab rate is slightly higher. Because if one person is earning, other person is not earning, then you get otherwise on 100,000 you will pay 25,000. $100,000 income, you pay $24,000 tax, but as an individual. But if you are filing together and another person is not earning, then you will pay $12,000 tax because you get that slab only. That's his.
Are these services deemed as on-site services called as a PA? Are we liable to register with the state taxes and pay the state taxes? Are there going to be tax withholdings in US?
Okay. For Indian company having
And we are providing the services are they deemed as on-site services in US?
Okay.
Are they going to withhold the taxes?
Okay. So if we are providing services to US, they will be similar to, so when they are making, so they are, a US entity is entering into a contract with an independent contractor or it may be a private limited company in India. So for that, India and US has a DTA, double taxation. What they will say that when I am making the payment, I will withhold 28%. But if you are giving me W8 Ben form, which is actually this one, W8 Ben and W8 Ben E. E is for entity, W8 Ben for individual, then they will not withhold the tax. So generally, invariably, you might have come across many of the clients saying that, okay, this W8 Ben E form I have to fill it. So if you fill that particular form, then they will not withhold tax.
What that form says?
So that form particularly says is that this particular company is a active, so there are many sections are there. So this is an active non-foreign financial entity. If it is a private limited company, if it is a financial entity, there is a different. So that is one section most of the people choose for companies. And then in part 3, we have to mention that under Article 12 or Article 15, whichever it is, right, with the clauses, or Article 7. But Article 12 is that professional fees also, or consulting income. under Article 12, Para 5, this we have to quote that section on that one, and saying that I am a resident of or taxpayer of India and I will take care of taxes in India. So as per the GTA, this is please withhold 0% or nil. If you fill that, certifying it, that's it. They will not withhold the tax. For them, that is good enough because that is the compiled information if you go to IRS.
But my question was, are they deemed as an on-site services, as if they are carried on the in US?
In the US.
Yes, deemed as if I have a PE there.
Okay, so they are not deemed as on-site services because the thing would be how IRS construed this as. IRS is not construing it as a on-site services. Because for on-site services, when they are making the payment, then the US rules only will be applicable, like 1099 and all. For Indian companies and all, this W8 means they are actually giving it's outsourced to a country which is outside of US or an entity which is outside of US.
Just I'll go into the taxation. Yeah.
So this one is more on the we'll go through now we'll come to the part wherein on the US tax only various forms we'll actually what are the various taxes and some of the forms we will actually go into this. So introduction of US tax, payroll tax, income tax, payroll tax and sales tax, but we are more focused on income tax as such. Federal versus state and what are the tax filing requirement particularly in the US. IRS quickly is basically IRS is our CBDT, Income Tax Department, Internal Revenue Service Department or a federal tax authority. Their key function is they collect taxes, corporate tax and individual tax, issues refunds and also publishes tax form just like in India. It's the equivalent of our CBDT. Now coming into when we are serving US, right, it is important to know how the geography of US is basically. So if you see US, right? We also call in India north, west, south, east. Right? Here they actually call it like west, central, and east. Now, most of I'll put it in this way that in US we will have about more than 650,000 forms. CPAs might be more, but CPA forms we call it, right? Exactly. Now, among these, right, if you see, mostly populated are east coast and this is the little west coast and some of the central coast would be in this Illinois and Texas, Florida, Texas. These are the states which are the Oklahoma not, but this Texas is slightly bigger than that. So if we consider like 5 or 6 states, not 5, 6, maybe 6 or 7 states as such, 80% of the accounting firms will be there. So there's all this like Wyoming or Colorado or Nebraska. These are very, very, so those are more like a tropical forest, mountains and other stuff, but it doesn't have. Everything is mostly skewed towards east, which is New York, New Jersey, even like all these small states are there. Delaware also, you have seen many of our startups are all in Delaware companies. So this is all Delaware here. Then Virginia, and so this is where many of in Gujarat, if you ask, most of the people are getting work, accounting firms are getting work from New York, New Jersey and California because of their kind of relation or known network would be there, right? New Jersey and all are more prone to be Indian and particularly on Gujarat side and all. So that's there. California is also one other. Texas is hugely now getting popular. Texas is huge, big one, but that's where many of the companies are also found. So this, if any I am not sure if you are interacted with any of the accounting firm peers, chartered accountant who are doing work for US. You ask them, they will only say that either we are getting from Florida or Texas, or even Illinois also may not be there. Only Florida, Texas, New York, New Jersey, California. This, apart from that, you will not find any of this who are actually there. So, but in these states, right, particularly, that is where, as I said, 80 or 82% of the 650,000 CPA firms are in this 5-6 states. So, if our goal is that we collaborate with a CPA, then this would be obviously why CPA firms are there, because businesses are also there. In the other thing, if these people, like say in Wyoming, if there might be lakhs and thousands of lakhs of businesses would be there, then there would be accounting firms there also. But it is not there like that, because it's kind of slightly mountain range and other stuff like that. But East Coast is, I always say East Coast is like Mumbai and West Coast is Bangalore. Because California is like Bangalore. New York, you will see that the way, because this is Silicon Valley on the West Coast, California, and East Coast is like financial center, don't give time also, they are all like in a hurry always in that. So that's how mostly New York and they work, and New Jersey is Ahmedabad. I mean, I actually honestly I hail from Gujarat. I have spent my substantial amount of my lifetime in Ahmedabad. That's why I am talking about that. But this is how the landscape of that. But if you see in this, there are few states which are kind of very tax friendly state. Tax friendly state means that there are no taxes on it. So Texas is one of them where there is no income tax. So you will have federal tax, or you have to pay state income tax, but Texas is saying that we will not collect state income tax. Similarly, there is Nevada, which is Las Vegas is there. Then there is Washington, Seattle, where Microsoft and all, which is actually just, we are seeing California on top of that, and then there is this Wyoming is there on the top west side. So, Washington state. So those are, there are, I think about 9 states are there where income tax is not there, state income tax. So that is one factor. Then other thing is why people are opening up in Delaware as well. So Delaware has actually 8% corporate tax, 8.25% corporate tax is there, income tax. But many of the startups we have seen here in Bangalore, they are all having offices, they are opening up, because venture capitalists said that Delaware-based companies, we said Delaware, so they are, but most of them have not encountered taxation because all of them are in the losses. And before the laws, right, they flip the company and they sell the stake and all of them would have moved out also. But once it has become profitable, then Delaware is not a great state to be in the income tax, right? Where it is more advantageous is because it has good security law. So your security law in the sense that when you are transferring like a preferred stock or a safe note and all, there are not very stringent regulations. And that is why venture capitalists are preferring it. But this I am talking about overall in the US, there are states which are very tax compliance or burden of tax compliance would be higher. And there are very states, like 8-9 states where it would be minimal as well. So this is how the geography is, and then there are certain taxes and all that. So we have federal IRS, which is governed by IRS, state is by all the state. There are certain states like New York and in even Central California also, there are certain city-wise there will be. City also, there will be small city tax also, you have to. It's considered this more like a local professional tax kind of thing which we are doing. Taxes, income tax, social security tax, Medicare tax, property tax. I know this might be a little more overwhelming, but I just want to see that income tax, we will cover as you see the next slide. Right? Property tax, I'll just before here only, the property tax is just how any tax we are paying property by 30th May in Bangalore we are paying or any other state also. It's just on house. Property tax is a deductible expense in the US. You can deduct from your individual tax return. Social Security and Medicare are taxes which are, let me put it here. This is tax on wages. Income taxes on wages, business profits and collected by federal and state. Now Social Security is collected through payroll. It's like a PF, but not your PF. It is collected by it's like a Social Security and Medicare, so that anyone who is more than 58 years there, they get a Social Security. They get Social Security and they get a Medicare. So, but it is covered through this way. So 6.2% of your gross, let's say $10,000 is my salary, then 6.2% of that will go as a contribution towards Social Security and 1.45% will go as a Medicare, which is health education. And in that one total combined, employer also has to pool in that much money and that will go to the government, and government uses that money to fund to everyone who is on after retirement you get a Social Security benefit like 3,000, 3,500 everyone depending on how your salary was, but 3,500, 4,000 you get as Social Security, and healthcare is free. Medicare. Property tax is tax on real estate. Gift tax, India gift tax is levied on donor. Their gift tax is on donor. Donor has to the tax, pay the taxes. But there is a catch here in that one. It's gift tax up to $14 million. You don't pay anything. Each individual up to $14 million gift you don't pay. If I am gifting $15 million, then on $1 million I will pay, or if I give 14 million and 100, then on $100 I will pay 40%. Payroll taxes is like so payroll tax is a income tax, Social Security, Medicare and state income tax. These are the four components in payroll tax. And sales tax is on goods and services collected by state and city is by city government department. Now, what are the types of entities are there? Individual, proprietary, proprietor, just similar how we are having it. Partnership is there, limited liability company, corporation. Now, corporation is like a regular corporation, and then there is a, so you form as a company, but you have an option to choose a small company, small corporation. And what does that mean is we will actually cover it. Estate and trust are there. So these are very similar how we. And income tax rates.
What is the difference between INC and LLC?
So LLC is limited liability company. Corporations are INC. So just like we are having private limited company and then there is an LLP in India, right? When we form a LLP, then it is like a partnership, which we say that it is limited liability partnership, and company means private limited company. Any corporation will have an INC. The INC is a company or a corporation, and LLC is a partnership. Limited liability company they call it, but limited liability company is nothing but a partnership.
Stocks are generally carry zero paid up value. How does it work?
I'm sorry?
Stocks, shares in US and incorporation, etc. They have zero paid up value.
Okay. So when you are incorporating a company, there is so what happens is that you have to give authorized capital. That authorized capital can be 1,000 or 100,000 or 10,000 or 1 million, 10 million as well. And with a denomination of up to 4, 5, 6, you can go 0.00001, which means your paid up capital value is $100. With the 10 million shares, with 0.00001 cents, which means you will have only $100 as paid up capital. But paid up capital is stocks with zero paid up capital value means they have authorized it, but they have not issued the stock, and everything is through loan or anything that is so that also US does not mandate that you need to have paid up capital before you actually start the business or bank account transfer.
Even after starting the business?
After starting the business also you can run the loan, zero paid up. But people will contribute little bit of that. So we have seen that most of the funds which are raising, right, this startup and all, they are having 10 million shares with 100 or 1000 more. We will not find any of the Indian company who are opened up a Delaware-based company having kind of more than 1000 paid up capital initial, 100 or 1000 only. They may be raising preferred stock, that is a different thing. Preferred stock to preferred convertible stock or safe note, they might be raising 2 million, 3 million, that would be a 400. But the zero paid up value means authorized is there but paid up is 0. But they are running still. And the income tax rate for individual, similar 10% to 37%. And within individual, there is you can file as a single member or married filing jointly or married filing separately. Married filing separately means I am married but I am filing separately, which will actually deemed to be like a single member. Slap
Any provision for divorced people? Separate?
So okay. Good question. That's like not married filing separately, they will become like a single family. If they are having a kid, so depending on who the kid is staying with whom, they will become head of household. And qualified surviving spouse is, for first qualified surviving spouse is basically if one of the spouse passed away, then still for the next 2 years they can still file as married filing jointly. That's why it's MFJ only. But that is it's for 2 years from the either husband or wife, whatever is partner. Capital gain rate is 0, 15 and 20%, similar to 12.5 and 20% in India. It's like 0 and 15 and 20%. For US tax residents, so 0% when I say is like up to $94,000 it is 0. 94 to 250,000 is 15%. Anything more than 250,000 capital gain income would be 20%. State income tax 0 to 15% depending on which state it is. 9% will be there. There would be. Why I have mentioned 15% is because if your income is crossing a threshold limit of 250 or 5 or 400,000, then there would be a surcharge and then there would be a net investment tax of 3%. So combinedly, if you combine that, you will probably get it. And 0 is why? Because there are 9 states like Texas, Florida is one, Washington state, then Wyoming, Nevada. These are the states where 0 tax is there, income tax on the state side.
Are the deductions, exemptions, concessions are available in domestic law? Say for example in India, is a capital gains tax exemption is under 54A, all these kind of things, reinvestment, everything. Are these concessions, deductions, everything given benefit in US and the term of aggregating the worldwide income?
Yes.
Say for example standard deduction is available or any other property tax deduction deduction is available. All these deductions are inflation index for that matter in India. When this matter is to be consolidated in US for the purpose of worldwide income, should we consider these deductions or is US government giving the benefit or not giving the benefit?
US government is giving the benefit and it is covered in my subsequent slide as well. But to answer your question, yes, as a US citizen or a green card holder, you have to report worldwide income. So when you are reporting worldwide income, you can, if there is a earned income in any foreign country, you can have an exclusion. So there are two options. Either you choose to exclude or you take a foreign tax credit, which is equivalent to Form 67 of India, or you exclude as well, if at all there is an exclusion thing. And to practically give a practical example, there are many people in Bangalore, many of our people who have come back from Silicon Valley and they are working in IT company here. They may be having salary of 1.12 CR or so. On that, now both of them, they are US citizens, means they will be filing their US return. When they are filing their US return, in the US we would be, because US does not have any other income, but they have to still file as a regular 1040 return. They have to file and show Indian income and take an exclusion or take a credit. So then they will take the credit, and in US the income would be only income which they will be charged to tax would be whatever dividend of those Charles Schwab at 1099 and all those received there in the US, they would be taxed on that. In India, whichever tax has been paid as TDS, they will be taking as a credit or exclusion. Exclusion, there is a limit as well, 1,33,000 per person. Means if husband and wife are there, both of them, but it's not that like if my income is say 150,000 and my income is 100,000, my wife's income is 150,000, then I can claim it's both of them are still under limit of 266. It's not like that. 133 per person. So I will get an exemption of 100. She will get an exemption of 133. 17 will be taxed. But on 17 you can still take a pro rata credit. Pro rata tax credit you can take whatever India tax you have paid. So that is how.
Is it applied year wise or it is we get fixed whether we file individually or as a family? Is it based on a particular tenure of years or each year?
Each year the slab is on like 133 is for this year. Last year it was 130. Before that it was 126. So it's as inflation adjusted.
Excuse me, sir.
Yeah.
Can you please take all the questions at the end of the session and just go to the slide? Everybody has a note to write down the questions.
Sure. Oh yeah. I think that would be better. We'll keep from after we cover this slide, right? We'll keep all the questions.
Yes. Thank you.
So income tax rates for we talked about income tax rate for individuals are 10 to 37% depending on your income, and the status would be single, married filing jointly, married filing separately, or head of household, and qualified surviving spouse. Corporation. Now corporation is important. Corporation, if I form an INC, in that INC as a regular corporation it would be 21%. But if I am opening up an LLC, or from the INC itself I opt as there is an provision where you can opt for small corporation like an S corp. They call it S corp. Now if there is a provision like S corp or an LLC, then no income tax will be paid by that business entity. Those are, they will file the return like profit loss, balance sheet, everything, but the income will be flowing. It's a pass-through entity, so it will go to the individual shareholder, individual shareholder in case of small corporation, or a partner or member in case of partnership or LLC. So that is both of them. Regular corporation pays tax as 21%, but small corporation and partnership are pass-through entity. They will be only just filing the information return and issuing a form like a share of profit form, which they would be individual would be taking care of and his individual tax. Social security we have actually covered in the social security is the tax contributed by employer and employee to pay the benefits. 6.2%, medical is 1.4%. Self-employed, which is like a proprietor, also pays self-employment tax. What happens is basically if imagine that I am the proprietor, and if I am actually giving, what I do is I don't pay myself salary, but at the end of the day, what is my gross receipt of 100k less some expenses of 20-25k, so on 75 is my earnings only, so on that also I have to pay tax as self-employment tax additionally. It is just that it's my salary only. What is my additional income is my whatever remains, that is my salary, that is self-employment tax. Property tax we have discussed is more like depending on the state wise, but it is by each of the state for their real estate owned by individuals or businesses. And you have an option to pay annually or semi-annually. Payroll taxes, right? Payroll taxes is basically how, imagine a pay slip, how it works. Like we have a gross salary, less income tax deduction, then there is a PF and professional tax. Similarly, in any employee earning in the US will have their gross salary. Apart from gross salary, they will have income tax as a withholding. That would be depending on how much, based on the slab. and then they will say that okay, if it is 100k or 120k, they will form under average 15 or 18% or 19%. So 18% is your income tax, 6.2 and 1.45 is your Medicare, and if you are in New York or California, then there are 4, 5, 6, 7% in that as well. So those are deducted. So net out of 100, you will receive 68 or 69 or 66 in that one. So that would be, we have on 10,000 in New Jersey, you will probably get about 6,900. This is just rough math. And in California, it might be 6,300. So to be paid to Fed, because those payroll taxes are basically income tax only, covered from the income tax, state income tax from recovered from the as a withholding or a TDS from that. City income tax is a additional tax depending on which city you are. So if you are in Detroit or New York or Philadelphia or San Francisco, then while individual is filing it, there would be a small percentage. City will also say that whatever is your income, you have to pay 1% tax or 0.8% tax. So you pay, but it is not a pan-America phenomena. Only few cities which you are in. And gift tax, we said that gift tax is by donor, but it is charged at income and state level as well. But there is a limit of $14 million lifetime. So you can keep on gifting, but if you are once you exhaust that, then your tax would be charged at 40%. Till that time, you have to just report that I have actually given a form. You have to just along with your income tax return, you have to just attach a form in that I have gifted 100,000 or 120,000. Estate tax is on same way tax levied on the transfer of property and to be paid by estate and not by the beneficiary. And that is also estate tax is also at 40%. So depending on how much assets you are owning on. Sales tax we are similar to income tax. One of the tax is sales tax. Sales tax is tax collected on goods similar to our GST or a VAT, but there is no input credit at all. It is only a pure sales tax. You will charge, say, we are seeing 6.5% or 6%, 8%. Between 3 to 8% people are, or the states are charging on goods and some services also. Services means if you are giving healthcare services, there might be some exemption taxes. But that is a very, very state specific subject because some of these healthcare services are exempt in Texas but chargeable in Florida. But that is where how your individual will come in. For sales tax, you have to file either a monthly or a quarterly return depending on your turnover. US citizens are taxed on a global income, but foreign tax credit can be claimed if you are having treaties based on foreign countries. And any non-resident are taxed only on the income accrued in the US. So if we as a chartered accountant, we open up a LLC. We open up a company like an LLC or a partnership firm in US only. Then we will have to file only income which is accrued in the US, which means it's a non-resident will be only filing as a non-resident I will be filing only partnership income because that is more like my LLC is not filing a informational return. It's a pass through, so it has to go through the individual. So any individual who are filing, who are getting the share of profit, they will have to file the tax. And Texas, Florida, Nevada, Wyoming, South Dakota, Alaska, North Dakota, and Washington State. These are where income tax is not there. And
sales tax is not a major income for CPS.
Sales tax, most of the people don't do it. Sales
Because
tax
it's simple, that's why. Or
it's just you have to depending on what you have to charge.
Here it is major.
Here it is major. There it is not. There is nothing like input rate also. They give just charge 6% or whatever standard rate, county, depending on the pin code or zip code, right? It would be 6.2%. Georgia has 5.5 to 6.5%. So some county, if I am in Savannah, then it would be 6.25. But if I am in Atlanta, it might be 6%.
The assessment sort of thing like here is not there. Like
No, not
whether
that.
you reported properly sales tax.
Those are, that will come on, but CPAs are not doing that, accounting firms which are not. Oh yeah, good. Just let me finish the. So when we now go into the income tax particularly, which are the forms for various taxpayers? For individuals we have 1040, which is similar to ITR 1, right? ITR 1, 2, 3, 4, 1040 NR plus income tax return, which is 15th March. Partnership and LLCs, they have to file by 15th of March. Corporation will be filing by 15th of April, and the form is 1120. And small corporation will file by 15th March again. Why 15? See, if you see partnership and small corporation, they have to file by 15th March. The reason why they have to file by 15th March is because once they give the form, which is actually a form called K1, share of profit form is called K1, they call stated K1. Like a 16A we give it here. So once they give that form, then only the individual will be able to file the return.
This is for the calendar.
Calendar. So due date is basically, due date is 4th month, 15th day of the 4th month or 15th day of the 3rd month, respectively. Having said that, these are the due dates. There is a 6-month automatic extension window is available if you file an extension, but you have to file an extension. That okay, I want to get an extension, then you file, then you get an extension on that. And if there is any tax payable, you can pay. Otherwise, when you file, then there would be an interest, some interest would be there. Not late filing, but interest would be there.
We had form number 6 in our country earlier
No. Okay.
for extension.
Extension. And this we'll take this particular slide, and then there is a tea break. I think there is tea break for 10 minutes, and we will assemble back. But personal versus business taxation, right? So personal tax return we have seen it's 1040 series. It may be 1040 NR or SR. SR means senior citizen number. Gross income minus deduction. And business means it is like partnership, S corporation or C corporation. Partnership, which is LLC, and S corporation. Both of them, 1120S and 11065, they are just filing an information return, but they are not paying tax. They will be, it's a pass through, and they will be giving it to individuals, shareholder or members. And personal tax will include wages, dividend, rental income, capital gain. Business tax will include income earned by partnership, less expenses and net profit, okay, including depreciation also. And federal is basically by US government, which is IRS, and state is basically for each state where you are residing. So if I have resided in 2 states, now what will happen is as an individual, and here this is important on the business side as well. If I as an individual have resided in 2 states, then I will file federal plus 2 state return. And now imagine a business who is having employee or CS or business operation in 40, because there are 50 states are there. So if you are having in all 50 states, then you will have federal plus 50 state return. You will file 51 returns. You will file. That is the thing. That for business, in each state you have to file a separate return. Except that if your business is in those 9 states, like Texas, those states you will not file. So on a maximum basis, you will file on 41 states. Federal plus 41 states will be there. So we'll take a tea break for 10 minutes, and we'll 6:35 we'll be back at 6:45, and between 6:45 to 7:30 we'll cover the forms only in that one. We are actually on.
Can we take a few questions before going to the tea break?
We can take from 7:30. I have the question and answer session.
Second floor, first floor.
Let us start. One of the other key aspects which we discussed in the earlier, before we discussed for the detail was the tax, particularly 15th March and 15th April are the due date for individuals and S corporation, and for corporation it is 15th April only. But the reason why I said that it is 4th month from the end of your tax year. For individuals it is December is the tax year. For businesses, which is corporations, they can opt for a year other than December as a tax year as well. So many of the subsidiaries of India may be opting as March as a financial year as well as a tax year. For them the due date will be 15th of, it will become 15th of July rather than 15th of April. And then they can take an extension up to December or January, 6 month extension. So that's why businesses, only because businesses has an option to opt for a year other than that by filing in the year. Reporting currency is all USD, just like because it's a US term. So who all are filing tax returns? Individual, corporation, partnership and LLCs. So partnership and LLCs are exactly same only. Limited liability companies are also partnership, limited liability partnerships are also partnership. Difference between these two is that all these professional organization, let's say chartered accountant firm or lawyer firm, you will see that they are all limited liability partnership. Or even some of these venture capitalist firms, they are like who are kind of management company also. They will run as a LLPs. And others or LLPs or LPs, limited partnerships they call it. Other all companies like service companies are there. Most of the service companies will follow like an LLCs, domestic or LLC. Corporation is like a normal corporation. For one of the things is that any Indian, I would say Indian, any non-US will not be able to form a S corporation. Will not be able to opt for an S corporation. S corporation means you need to have a mandatory US only. If US is not there, US citizen or a green card holder, then S corporation is not an option. As a company, and then I am zero. So these are the slabs that single. Just like we are having 300,000, 400,000 basic exemption limit, 14,600 is for individual. Married filing jointly is 29,200. And others are like if you are getting some 1099 form like 16A or so, then you will tax filing require, you have to file the tax return answer. If your income is less than 14,600, you don't need to file the tax return in the US, but you can voluntarily file it if you want to have like claim refund or if there are any withholding also. LLC and business corporation, they have to mandatory file returns because they are a pass-through. S corporation, they are pass-through. So share of profit,
will be taxed at an individual level. So share of profit in India, if you see, is exempt because partnership pays tax or LLP pays tax. In US, it is reverse, exactly opposite, where partnership does not pay tax and share of profit is a taxable event. And corporation are taxed. These are the other key aspects. Is the social security number, ITIN and FEIN. Social security number is considered as is your PAN number. Income, it's like tax identification number for each individual. Individual tax identification number is ITIN is for any foreign, which is non-US person. They have to actually take. If I am having some stocks or any other things also, or like say if many people who are working in corporate, they are getting some dividends and other stuff, you need to have an IT number. Otherwise, your withholding will be more. And if
PAN number.
it's a PAN number only, it's a tax identification number, but for foreign people, for non-US people. Social security number is individual PAN number. FEIN is business PAN number. FEIN means Federal Employer Identification, is a tax identification number for partnership and corporation, alias PAN for business. So we have FEIN or what we call it EIN. EIN is nothing but business PAN. SSN is social security, is your individual PAN through which your tax return and everything taxes have been filed. Now let's see 1040 form. Now 1040 is the form for individual. Individual will file, it's ITR 1, 2, 3, 4 combined if you put it. It is like that only. What all is income tax return filed by individual person. We know that it can be either a single or married filing, jointly married filing separately as well, and who are the dependent people as a family, right? I may have my minor kids. They also have to actually put it as a dependent also. Now, so this is what your form would look. The key parts of that would be: first part is like individual information. Second is filing status, which are what. Third is who are my dependents. Dependents means my kids mostly, and not my parents, because parents might be filing separate return, their own. But who are my dependents, whom I am supporting as such, mostly kids or individuals. And then the part 4 would be all your income, which includes your salary income, and this is how the flow in the US will go. The line wise, if you see. In India, we have like salary, house property, business, capital gain, other sources. There it is salary, interest, dividend, capital gain, rental income, share of profit. And then other if at all everything. But this is how it will be: salary, interest, and each of them will have schedule. Interest, dividend, schedule B will come, annexure they call it. Like but if you see, it's a main 2-page form only, and others are all annexures. Once we have all your income, which is your gross income, then there are adjustment from income are there, which is like some of these. If you have done some educator expenses, for my kids I have done some education expenses, or myself on my own I have done, or student loan or anything interest which I have paid as a, those are adjustment from it. Retirement contribution is there, any of this to them. So those will make my adjustment from income, means that will reduce my gross income, and that will be my adjusted gross income. And from adjusted gross income, you will get a standard deduction or itemized deduction. Standard deduction like mortgage interest, Medicare expenses, property taxes, those are, or even donations and all. So once you do that, that is your part 6 of itemized deduction. And after itemized deduction, what becomes is your taxable income and tax. And on tax, there will be a credit, which is under section 8. Earlier we had a rebate like section 88 credit, erstwhile income tax earlier. So that you have a tax, but then there are certain credits. Let's say energy tax credit if you are having electric vehicle anywhere. If you are having child, on child then depending on number of child you get $2,000 each tax credit. And then if you are having income from foreign, and in foreign you have paid tax with a double taxation avoidance, DDA, DTA, then you will get that foreign tax credit also. So all the credits will come in there. And lastly, what remains, you will be making the payment, balance due or refund. So the flow of computation will go like this: gross income less adjustment, which means adjusted gross income, less itemized deduction or standard deduction. Itemized deduction means standard, so you get a standard deduction fixed. You get a 15,000 standard deduction individually, and as a married filing jointly, you get 30,000 standard deduction. You get it. But if you are
Only if there is salary.
no, not salary. Standard deduction is for any of the income which you are having. But so you get a standard deduction is there. If you are having more than standard deduction, say if I am filing jointly with my wife and I have some local taxes, property tax paid, mortgage interest, charity, or certain job search expense, all of them are more than 30,000, which is maybe 41,000, then I will have to itemize it. If you don't have, then you can get standard deduction. If you have not, I have not spent zero, I have spent $0, still I get 30,000. So as a married filing, if I am individual, then 50,000. So that adjustment from AGI, they call it, right? Adjustment gross income. When you deduct that, you get a taxable income, and then tax credit, whatever tax, net tax, and tax payments, and these are balanced to your refund. So this is the computation for that. And you see, I zoom out. This is your 1040 form. Say 2-page form is there. Entire page, all other form when you are seeing any of the 1040 form, if at all of any of your clients you have seen, first 2 page is the main form, others are all scheduled. You will see it is more like a executive summary of Excel, and then others are all the annexures. Annexures schedules are there. And you will see that okay, schedule B, E, because each of these line item is linked to that. This is how your 1040 would be. Your individual returns. Individual return is mostly have individual information. 1040 has first part is individual information, filing status, dependents. Depends because each based on dependents your exemption would be there. You get that because you get dependent benefit on there. Income types of which is similar sources of income. Adjustment from income, which is there. Itemized deduction. Tax credit. Credits means there are many credits. Energy credit is there. Child tax credit is there. Dependent credit. Foreign tax credit. So that is 1040. Now 1065 I see. 1065 is a partnership form or a LLC form. LLC form. LLC every has to file by 15th of March. Now what that particular form contains or this entire return contains is one is business information, which is what is my business name, date it started, when what is my FEIN or EIN number, which state it is, address and everything in that, and what is my information is like in Indian return we put it like all this code, no, that 16001 and all that business code in the income tax return business information is there. It is the same business information. Then you put it profit loss balance sheet, income and expenses, profit loss, part 3 schedule A balance sheet, and M1 and part 4 is M1 and M2. M1 and M2 is nothing but schedule M1 and M2 is basically book to tax profit. M1 is book to tax profit, which is basically showing your either what is depreciation as per books and depreciation as per tax if there is difference. Certain disallowable expenses would be there, so that you have to just list down that and put a reconciliation. It's M1 is a reconciliation. M2 is a capital account analysis, partners capital account. So that is your part 4, and K1 is basically what. So part each of the partners, what is the income, what was the partner's capital total, and then what was the income accrued during the year, if any drawings or distribution are there, and then it will be allocated to partners, like each of these partners will get K1. So part M1 and M2 is partners analysis and that one, and K1 is individual partner, we have to give it to them. So the way computation would be total business income, which is gross receipt minus gross receipt less business expenses. Now gross receipt you will see that it is like a business income, then interest income, other income, that also may happen. What remains is net profit. That net profit will be $100 is there are $30 expense, $70 will be if there are two partners, it will be allocated as 35 each to them, and each partner will get $35 K1, other partner will get $35 K1. They will report in their individual return, which would be here, which we discussed. Share of profit from partnership, if there is a, which is actually one of the schedule of Schedule E is there. So that is your 1065, and tax from LLC will not pay tax. It's only individual level it will go in. And the same works for, so 1065, right? This is your 1065 form. If you see the 1065 form, it has this information, partner, like what is this name of partnership, total, what is the code, which nature of business and other stuff, like IT service or manufacturing and other stuff. And then it starts with profit and loss. So business return in the US is all about profit and loss balance sheet. And M1, which is like book to tax. Book to tax, as per tax you may get say straight down, as per books it might be straight line method. In this one maybe accelerated cost recovery and all method will be there. So there, because of that there might be difference in depreciation. There might be.
It's a reconciliation.
It's a reconciliation. M1 is a reconciliation. Otherwise you have to input all the numbers of your profit and loss and balance sheet in this one. And obviously you have to, when you are actually filing it, you have to enter when you are entering it, right? Just like partnership. So who are the partners?
Yes, PAN number.
PAN number and everything. 1120 is the cousin brother of 1065. Same. The only thing is it's a corporation, otherwise it's exactly, it's only thing is do family of, one is corporation family, but it is S corporation means exactly, there is nothing schedule K1, L, M1 and M2. Now, in only one difference in this, everything is exactly same, business information, income expenses, schedule K, L, M1 also same. M2 in partnership return or LLC return we were talking about as analysis of capital account. In this particular thing it would be analysis of retained earnings, because shareholder capital not necessarily it would be there or not, but it's retained earnings, whatever is reserves, right, retained earnings, it would be there. Same like income minus expenses, net profit. This profit is allocated to shareholders. They call it share because it becomes S corporation as shareholder. Each shareholder reports their share on 1040, and tax is calculated at an individual level because these are the pass-through entity. This is your 1120S form, very similar to how 1065 is exactly. 1120 form, same accompanying family only, except that M1, M2, everything will be there, but based on that net income, you will be having a tax. There will be a tax payable by a corporation if there is a profit. If no, then there will be loss also. But the business information, income expenses, Schedule L, balance sheet, M1 is book profit to tax profit. In the sense there are certain meals and
Loss can be carried forward.
sorry, loss.
Can be carried forward.
Loss can be carried forward for next 8 years. You can forward. Schedule K is also there. Tax payment is there. Total income less business expenses computation taxable income. But taxable income is not a pass through. It will be tax paid at 21%, paid by corporation directly. If dividends are distributed, now it will be reported on 1040 as well. And tax is calculated again at an individual level on dividend. So there is a kind of a double taxation element involved in this particular C corporation, because out of 100 you will pay 21. 21% is the tax. So 21 means you paid. So remaining 79 is there. So that 7, when you are distributing it, on that also it's considered as a dividend. So they will be paying tax.
Shareholder will.
Shareholder will be paying tax. Shareholder. 1120. This is a similar form is there. Very similar, except that there are certain nuances in this one would be based on the tax payment and all you have to do.
No annexures are allowed.
Huh?
Like P&L balance sheet cannot be filed as an
No,
annex.
annexure. So the form contains only you have to actually. What happens is when you the form, right, contains all the income tax, just like same fields which we are having in ITR 3. It is there, except that if you are having more other expenses, then you will put it as a other expense and software will generate an excess, like a statement there. Apart from this, so these are the four main forms. 1040 which is for individual, 1065 is for LLCs which is pass through, 1120 is consisting of 1065 pass through only, and 1120 which is like a regular corporation. Most of the companies in Bangalore who are actually having startups, right, and startups are many of them among our clientele, if they are having company in the US, they will be predominantly would have formed a corporation only, because because of the product company they have to raise money. If you have to raise money and all, it is a corporation only would be there. LLC is more for service company. There are people who will form service, but that would be bootstrap. They are only into service business. Then LLCs will be there. But apart from that, there are other forms which is like W2. W2 is report salaries and wages income. 1099 interest is there. 1099 dividend, and 1099B which is reporting capital transaction. 1099G reports unemployment income. 1099R is retirement income. 1099 miscellaneous is reports commission income. So this, if you see all this 1099 series, is nothing but consider this as a form 16A with 194. Now I think sections have changed, but earlier our old act which was there, in form 16A we are saying 194J, 194C or 194IA. It's exactly that. So 1099 is equivalent.
This has to be filed annually.
This has to be filed by company annually, and that would be your source document for filing the return for individual. So W2 is form 16, but 1099 is form 16A. But 1099 may have different 1099 like interest, dividend and all. How we report in form 16 is, in 16A we are reporting by section. In the sense your 16A is one, but under that there, so here they are actually saying for interest there is a 1099 interest. For royalty there is 1099 miscellaneous or commission. K1 is the form, 1042S is foreign person source income subject to tax withholding. In many of our Indian people would be receiving that if they are doing or they are working in a corporate or so. K1 is the form which is share of profit, the pass-through entity one, and they will be. W9 is a request for social security application. Request for US person social security or EIN by a person. So we discussed about W8 when withholding thing, which was for a foreign person. But if a local person has to give it, local vendor, they will file a W9. And W7 is the application for IT. And these are the forms. This is how the form would look like. This is the form 16, which will contain federal, what is your wages, income tax, social security and social security tax, Medicare tax, and then here it would be what is your state wages and state tax. These are the, and others are more like if you have enrolled in a NPS or other retirement plan or so, those are information would be coming in here. But this may not be always applicable, but this 1 to 6 boxes plus 16 to 19, that would be always there in all most of the return, most of every return. This is 1099 interest, so it's like interest. It gives more detail about the on date on which this was. So any of the capital gain transactions was there, purchase, sale. This is miscellaneous. So other than any other is there, rent, royalty, other income. Now if I put the comparative, which I have actually just we were talking about it, but I have put it in a slider. So here we have US, we have Jan to December is the main calendar year kind of follow, or tax year which is followed. We follow April to March. Our due date is 31st July. Now it has been changed. July, August, September is there for idea 1, 2, 3, 4 staggered way. US it is 15th April for individual, For businesses it is 15th March, but 15th April is for company also, corporate regular. Income tax form is 1040, India is 1234. Identification number is SSN and PAN. We have W2 we discussed is 16 and 1099 is 16. And calculation of would be, we do it in India as income less deduction less TDS payment, and on 31st December if it is there is a late fee. Here it is like adjustment, we saw there is income less adjustment which will make it like adjusted gross income less itemized or standard deduction, which will give you a taxable income. Post taxable income there would be tax and then tax credits available. And apart from that, withholding and payments. 6 month extension is available, and this is the website. Key difference is basically prepare and file jointly. Here we have to file separately. And then there is a state tax there. India we don't have a state particular. So, to summarize, right, in US, income tax is charged at a federal and state level both. US citizen and green card holders, global income applicable. Global income, of course, you can take exclusion or credit afterwards, or you can take credits as well. Individual file income tax and tax rates varies from 10 to 37%. Proprietor will file business tax return in that person. Partnerships and small corporation are passed through. Corporation will be filing as a corporation return which will be paying tax. Now, one of the other thing which probably we may have missed out in our earlier talk was, we talked about entities like LLCs. We have talked about that. There is partnership, LLCs, corporation, S corporation. Corporation can be S corp or a regular corporation. Then there is a one entity called proprietorship which you will be paying a self-employment tax. So, but if you are having a business as a proprietor, if you are doing as a proprietor, freelancer, you are not from an LLC, then you will be filing return, not separately, you will be filing as a Schedule C in your return only, just along with interest, dividend and other income, right? You will be reporting business income also, and then business income annexure has receipt minus all these other expenses like travel or vehicle expense and other stuff, and then you will be paying income tax on that. Share of profit is taxable at a partner level, corporation pays 21%. Capital gain 0 to 20% depending on state level. And as I said, if you are having passive income means capital gain plus your income from interest and dividend. Rent also. If that is more than $250,000, you will pay 3.8% tax extra. Surcharge. So I am just putting like how we are viewing the taxation. Social security tax is deducted from payroll. Employer also contributes. Employee also deducts. Employees deduction happens, and employer contributes, and it is paid for the benefit of retired social security. Yes, sir.
Kids are working there. They have income in India, like in rent from properties and all that. Do they have to include it in the US income tax return?
I'll just give me 2 minutes on that. I'm just finishing, and then I'll take up the first question on that. So Medicare, Social Security is about Social Security benefit to retired after 58. Medicare is also about the same only. Medicare, because after 58 you don't incur, even if you don't have insurance, state will sponsor it. So that is Medicare. And self-employed, if you are a proprietor, then you will be paying over and above your regular income tax, self-employment tax. Because self-employment tax is nothing but Social Security, Medicare tax only. Because as I said, like if I am drawing $70,000 from my business, so I am paying $70,000 on which maybe my slab might be 20%. So I pay that, but over and above that I have to contribute to Social Security. So that is an additional tax we will cover. That's called self-employment tax. If you are a self-employed.
That is a federal tax, social security.
Yes. And US citizen and residents also have to file a form called foreign bank account and investment held outside of US. For that they call a form called foreign bank account reporting FBAR. So they have to file if your total bank account balance at any day of the year is more than $10,000, then you have to file it with IRS and Treasury. You have to file it, mostly it goes to Treasury, US Treasury. That what are the bank account name, address, bank account number and highest balance. It's just a disclosure information. So they have to file, but that is mandatory for people who are US citizen and resident or green card. They have to file. Sir, your question, right? That
H1B visa.
for H1B also they have, because they are US resident. Right? So what happens is, see, H1B, we have US citizen, here you have green card holder and then H1B. Resident, they will be H1B people if they are staying more than 180 days, then they will be under the resident status.
So the filing now with one authority or with many different authorities, like MC, like we have MC income tax. So
Yeah.
are the filing with one authority or?
So filing, individual income tax filing is with one authority, which is IRS plus state. State means state has, if you, depending on where your business you are doing, so you will be filing with income tax. Like let's say if I am in California state, so then California Tax Authority, which is Franchise Tax Board, they call it FTB, they govern income tax, and IRS my regular one, which is, so I have to pay 21% or 22% or 30%, whichever slab I am falling as an individual, I will pay there, plus I will pay 7-8% to state one.
Separate forms.
Separate form. In the sense, obviously, software will be flowing through that one, but there are two separate forms only. One is called 1040. Each state will have, California form is called CA 500 and 540. CA 540. Texas will not have. There are states where income tax is not there. Coming to that one about whether like MCA also, for if you are having a business, LLC or a corporation, then you would be registering not with franchise tax board. From franchise tax board, you will be only getting a tax account number, tax withholding a tax number for that one. For that, so that they identify that against this particular business I have taken this particular number. But you will be registering with Secretary of State. Secretary of State is nothing but NC, where you have to report annually your, not the tax also, but the disclosure. It's like a MGT7. MGT7 is mandatory there. Annual information, what are your assets, total assets, who are the key officers, any change in officer, any change in capital. Those information you will file in Delaware also, you will file in California as well, depending on where your business is. So for businesses, they will be, you have to file it, that is the annual report. And then there will be a nominal fee, there will be fee from $200 to $800 in each state, depending on which state. So your question about that your kids were in US.
H1B visa holders, they have income in India, like rental income, interest income, sometimes capital gains. How do they report to the US?
So since they are resident, they have to report their worldwide income. So they report as if like the local income is there, say from Vanguard or Fidelity or something, income, interest income plus capital gain is there. They have to report it as foreign income. Against foreign income, then they have to, in India, if they have paid tax, they have to take the credit.
Take tax.
Tax rate. So one form which I used is that form 67 equivalent of US, equivalent in US is 1116 form, 1116. It's a foreign tax credit form. It's a foreign tax credit. Whichever foreign income you are showing, you have to say, okay, the foreign tax, this is my total foreign income, and this is my foreign tax which I have paid, and you get the credit for that. Yes,
To be
question.
specific, please. For a gift tax, you have given a number of $14 million. So that is the annual income or it is a cumulative gift tax amount?
Oh, that is a lifetime rate. Lifetime rate. So each time when you are paying, giving the gift, it will get utilized.
Okay. Another question, you mentioned that there is also a tax on the services in some of the states.
Yes.
So,
Sales tax.
yeah, so a specific question for the people who are providing tax preparation service or bookkeeping service.
No tax.
No tax.
No tax.
Because they generally provide across the 52 states.
Yes, yes.
So-
No. That is the center that it is not. Those are not there.
Third question is W8 ban, which you mentioned. Is it equivalent to Form 10F in India? Where to file, in India or in US?
W8 Ben form, you have to give it to the person who is actually going to pay.
But where to file?
Oh, okay. So W8 Ben form is that person. So the finance
For
department.
example, I am providing the service and somebody has to withhold,
Right.
and I don't want them to withhold.
Right.
So I have to provide them W8. Where do I get W8? Shall I apply to Indian income tax or should I apply to IRS with that?
Oh, no. So W8 what happens is you are providing. Let me play it back. You are providing services to US entity. US entity will give you. You have say that you have to give me W8 Ben.
Correct.
So you have to just fill a regular W8 Ben form.
So it's a PDF or
PDF form. A PDF form is there.
So there is no
You don't
concept
need to-
of TRC and all those
No,
things that we don't have to do.
no. You have to just file that, mention the clause, and give it to the finance department or of the customer. Your customer, for them you are the vendor, right?
Okay.
Foreign vendor for you.
So that will be helpful only for the federal tax or it is also helpful for the state tax?
No, only for federal tax because since you are foreign, you are not residing in any of the state.
Okay.
So the state is basically if you are residing in that state, then state tax and all comes in. Otherwise, state will not have any say.
One last question. There was a specific mention that if you are a non-resident in US, then only on those income which accrue in US, the tax liability will be there. Now, say for example, a Indian chartered accountant or maybe a certified public accountant who is practicing from India, he is on a visit for a month in US and he is providing consultancy to Indian clients or to US clients or signing of something or paying of something. Will that be construed as a income accrued over there?
Okay. So, since you are there for a month or so,
Yeah,
and
business visa.
business visa.
Yeah.
So ideally on business visa you probably are not. You are
Allowed
just
to.
for on that. Yeah. But it's basically you are giving consultancy. It's more like construed as a meetings, business meetings, and that way. It is since you are resident of India only, a citizen of India. US will not charge on that. And I see that there are people who are going on a 3-month assignment from here.
Yeah.
For 2-3 months assignment for tax work or audit work and all, right? Audit in the sense for during the season they will go. For them, the income is actually accrued in India only, it is not accrued in the US.
Because I have seen instances wherein, say, McKinsey partners are there in US for a meeting for 5-6 days, but then income attributable to those 5-6 days are taxed over there. So that's happening.
No, so it depends on who is the client there who is going to pay in that particular, right? If the client is paying you, where will the client pay you? Client will be paying in
Clients are in India.
India.
Yeah.
I don't think in that case, because I haven't come across, you may be right on that particular thing that maybe Deloitte and they will be treating as accrued in US or so, that one, particularly with very strictly going by the wordings of that okay, this because you have given service in US. Because my counter argument to that is that actually you are not supposed to give any service in US.
Absolutely, because they are not on the work visa.
Yes, that's it.
Okay, thank you.
His residence of 180 days also will not be there. May not be.
In business visa, you cannot stay within 6 months. You have to step out.
But taxability depends on number of days of stay. Am I right, sir?
Tax assistance. If you are see as a business visa, you are going there 3, 4, 5 months. That will not be accrued. It will be considered in income in India only if assuming that you are an Indian resident also. Tax there is based on The one is the tax residency. Tax residency is basically how many days you have spent in this particular year and in the past year also, and based on that it will come in. We have clientele who have gone on H1B also, and first year they would be non-resident also if they have not spent 3-4 months or like not spent 6 months per year. Yes, sir.
Sales tax paid across several states and income tax paid across several states are both business deductible expenditures. In the main income tax return, can both be tax deductible.
Okay, so first sales tax, I'll answer that. Sales tax paid across states are deductible business expense for LLC, C corporation, S corporation. Now, as LLC, S corp and C corp, I'll put it in that order. Because first two are passed through, other one not. Income tax will be paid only by, as a business, income tax will be paid only by corporation. It would not be paid because the others are only like a pass through. Both individually it will come over. So for them, this will not be a question of that deductible income tax payment will not come.
So if I'm an S corp in 3 or 4 states,
Yes.
I'll be paying 3 or 4 income taxes.
You are filing 3 or 4 income tax, but individual is paying 3 or 4 income. They will be, when I mentioned K1 form, you will get K1, 1 K federal, and then there would be 3 state forms also would be there for K1. Yes.
Sir, going to the initial discussion regarding opportunities for chartered accountants in US, what opportunities would open up if you do a CPA, and if that is advantageous, which state CPA is better?
CPA has, as I said that right now, two things. In fact, CPA is there is a shortage of CPA in the US. Indians are doing CPA. Many of the, like I think there is Miles, Simandar, and they are actually also very heavily into CPA training. Now, opportunity for CPAs would be primarily. So to be fair, I'll put it like this. There would be opportunity for CPA if you are doing it, but in the US with the current geopolitical situation, it might be difficult to get this H1 and other stuff on that one, right? So that is where in the US there are chances of what were there before 2 years that are slimmed down right now. But other opportunity is that Indian companies and GCCs are looking for more CPAs who are having knowledge of US compliances. So because they are opening up many of these offices in Bangalore, Hyderabad, Gurgaon. So there you will get an opportunity.
And which state CPA is better? If you have?
CPA, Colorado is there, or which one? And I honestly, we did it in Colorado, but that was way back. But right now, I think Texas and Washington State people are talking about that.
State matters.
State matters only. So CPA, after that you have to take license. So if you are taking a license, you can only audit if you have to do audit, right? Particularly, then only CPA license matters. Otherwise, it doesn't matter where, because as an accounting service, tax advisory service, you can give nationwide. When it comes to attestation function, so there are audit requirements. Then you will probably are only then if you are a Washington State licensed CPA, then you have to take California license also if someone is actually in California. That is where the difference matters. But
their CPA is a state subject.
No.
In US.
In US, you can you can take CPA course examination from any of the states. So I did, let's say, from Washington State. So then you will register your membership with or something like that, register your CPA license from that state. But if you have to do an attestation for other, you have to take a certain other state one.
License.
License.
So if you are a CPA in Washington and you want to have the license in California, you have to do CPA again or?
No. You have to file there is a
license requirement.
You fill in form, pay the fees, you get that. But it is only a requirement if you want to do an attestation in another state. Or you want to do business there, you want to open up a physical office.
Is it practically is it like what value addition it will make?
I am not even into it. We are not going into attestation if it is coming for us, right? There are a few requirements of audit comes in. Even though US audit is not mandatory, we take care of that audit. But we are actually giving, as I said, one of the person who is my close friend as well. He is in Chicago. I give it to him.
But he not doing the attestation custom, will we get business from?
Yeah. Attestation is not mandatory. Attestation is not a mandatory requirement. See, compliance, accounting, those are mandatory things. Compliance everywhere. Attestation though only hardly few people. It's not like even how we in India we are saying that more than 5 CR you have to mandate your private limited company, you have to get audited. Here it is not at all mandatory. So people, 80% or more than that I would say, 90% of the CPA firms may not be doing audit only. The regular, which is small to mid-size. Only big firms, we call it like BDO, Grant Thornton, and those will be doing audit. Because that requirement is also limited, it is only either a listed company or companies who are having listed outside of US, right? If they are listed in
Multinational.
Yes.
You say there is a shortage of CPAs. Still, the government is not giving, work visas and all that for CPA qualified people. How do they look at it?
Okay. Shortage of CPA. Correct. So that field, shortage of CPA because their accounting, particularly if you see, is not a full job there. See, traditionally CPAs in the US are doing accounting and bookkeeping. And tax work is there. Tax work is seasonal, but they are doing round year accounting, bookkeeping. That is not a very cool thing. That's why they are now. Why CPA, average New Jersey people, right? This friend I told in Chicago, he applied for H1 and all. He's giving some of the H1, right? $50,000 his salary is giving. Now $50,000. So H1B has a like 150,000 and all. When the multinationals are taking for him, the 50,000, 60,000, 80,000 people will not come. So I'll put it again on that one. That shortage of accountant is there. Accounting with AI is rapidly getting automated. People are seeing even softwares. I can see the impact that they are actually trying to do more and more automation.
So is it possible to line up with the CPA firm in the US and we can do some back office work here? That's what we are doing.
So that is precisely the work. If you go on Gujarat side, you see most of the people doing that.
How to get first place?
I have two things I will do. Identify some of, say as I said right on that state, if you see the map, East Coast, or identify one or two states, from there take the contacts of, or now that we have Claude and ChatGPT, ask them that okay, I need to get 10 to 15 mid-sized accounting firms. I want to offer them this service, give me the contact, and you connect them on LinkedIn, follow them on Twitter, what they are doing, and then connect them, they will actually start, because they are posting many requirements that I am looking for a person for tax. Because but one thing which I have seen, because this particular kind of session I have done it in earlier in Gujarat as well, Delhi as well. The thing has come up is that they gave 3-4 people have given me feedback that I went to US for accounting. We were looking for accounting work primarily because accounting is easy to start, right? And they say that if you're doing accounting and tax both, then I can give you. So the requirement is that they will actually invariably ask that if you are taking tax, because if they want tax work to be somewhere else in accounting, then that will not work. So that is where people have started doing the tax work as well. So taxation, how to get work is, as I said, LinkedIn. This is a good one.
LinkedIn will over 4 years back.
4 years.
So cloud maybe will give a list of.
List of firms, and as I said, like there are, you don't need to focus on entire 40-50 states. Only 6-7 states you focus, and among that also, let's say 6 states you drill down to one state. Like okay, let's say Texas. But I mean that we can discuss offline as well. But as far as pricing is concerned, no. You see, one thing is that how to find. After that, what would be the pricing? What to price and all, right? Because I'll tell you because we are working with 1 or 2 CPA firms only, but mostly direct clients. We are working with direct clients. In fact, apart from a couple of them, because we have started in 2004, so we are continuing with that, the same one. It's also a Gujarati, it's that CPA in Texas. But other than that, we are having direct client. But as far as pricing variation will concern, is that a person earning in California maybe 200,000, 250,000 normal engineer, staff engineer and all, they will earn 250,000. They will be paying $900,000. A person in Colorado or Texas maybe earning might be 120 or 150,000, but they will be paying only $200 for tax returns. So because that is where the client is, right? When you are actually New Jersey and all are like very competitive state. So there they will say that because their CPAs only are charging $300. CPAs themselves in New Jersey are charging. As I said, no, New Jersey. My correct analogy is correct that New Jersey is like Ahmedabad.
We also need
New York
to
is
learn
Mumbai.
about geography.
Geography. But California people, because that's like a very, very innovation and they are more concerned about that. Because there, they think about valuation, business also will think about, okay, I have to make it like a unicorn, how I can do this. So similar how we can see in vibes in HSR or Indiranagar and Kormangala, right, in cafes, like that. But Colorado, I will tell you one Indian, it came through one of a friend reference. So this client, he told me how much he charge so in India return we filed it because of some capital gain or so as a non-resident. So they asked me what is the charges for your tax return. So we charge generally starting from $300 depending on complexity. This is my, I am paying $150 here. So then I immediately said that no problem, we'll do it for $150. For you, I'll do it. But then he brought 6-7 of his friends. He said, if you do, I can give my 6-7 friends as well. Okay. Who are working. But then that is what this was 3 years back, that the realization is that it is not uniform, right? In the sense, Colorado Mountain and Denver and all, they are like New Jersey though. In Texas also I am seeing, Texas is 400, 450, the people charge business return. So how much we now, how to quantify that, but that is also, so if you are having direct client and if you are having CPA, there would be a different one. So if it's CPA, then CPA will obviously say that.
Claude will not give that info.
Claude will also give info. Claude will give that info. Claude is giving all the info because of the collective thing they are having. I am giving based on whatever my experiences are there and that. I am giving it could be similar only.
You are a Gujarati, sir.
Better than a Claude.
So that's
What are the best softwares you use for filings and
Filings, Incube Tax Online and CCH is there. Drake, if you want like a very, by the way, these softwares of tax softwares are very expensive, by the way. They're like charging some $4,500 to $5,500
Per annum.
per annum
License.
And
Any good book you can suggest for us to learn? Taxes.
Taxes.
Income tax US.
I have a material I have created fully. I can share that. I'll
Please,
share.
please.
I have like a 10 full. This is just a teaser, right? Individually, what all things which are there, I'll.
So just like Chaturvedi Pitisarya volume.
What about the other area of profession, like valuation, due diligence, and is there any scope? Like, or our certificate, or our work is accepted there as a quality?
Yeah, valuation, I think generally people are doing it. We are no, but for startups, right, there is a huge valuation scope. Everyone is looking for 409A valuation.
But Indian valuers are not allowed. Indian valuers are not recognized valuer over there.
Over there.
You need to do a valuation course.
If you do US CBA, that will work.
One of my partners has done it.
Okay. So if there are no other questions, thank you. Yes.
Can you file the US tax returns in India for anywhere you want?
Yeah. You can file from India also. You need to take a PIN, as a preparer, you need to take a PIN number. PIN. Not necessary. As a chartered accountant also you can take a PIN. It's not necessary to be a. So there are three things, right? One is CPA. The other one is enrolled agent. For taxation, there are certain called enrolled agent. And third is as a CA also, you can, as a professional, you can take a professional tax identification number. You can take that PIN and file the.
From here only we can
Yes.
apply.
Yes.
Share of profit will be taxed in US again or?
Yes. So if US resident is partner in here, so what happens is the share of profit in India is exempt.
Yeah.
Like say 100 and partnership has paid 30, so 70 is your tax. So when that 70 is share of profit exempt, but there it is taxable. What you need to do in that case is, there is if US resident is a partner in a foreign partnership, they have to file a form called 8812 also. There is a form called foreign partnership. They file that and show gross income 100 and what tax has been paid, they will take it credit. As in 1118. In India, tax paid, that will be taken as a credit. Then, based on that, there will be a K1 coming in. That way. So, in that K1 there will be a tax credit also. So, India tax, to claim that you have to file as a gross credit.
Can you share your contact details?
Oh, sure. Oh, is it? Oh, sorry.
Maybe you can
Oh, one second, I'll put it in the.
make it big.
Make it big this.
Zoom it. 9639630005.
If you can read it, we can write it.
We can call you
Yeah, you can.
for any queries.
Yeah, you can.
One query is free. One query is free.
No. First query or last?
First one.
Yes, sir.
US number?
My US number. I haven't shared. I have like, I know, 65031.
Thank you, CA Varun. I'm pretty sure members have gained a lot of insights about how to think global and of course how to serve global after this particular session. A big round of applause for today's speaker. I request Sri Virupaksappa Thupur, Vice Chairman Bengaluru Branch, to come on the dais and hand over the memento for the speaker. Thank you. He has been a veteran in this US taxation and accounting, of course, because he has closely worked with QuickBooks as well. So with that being said, of course, Think Global, Serve Global session continues in the upcoming weeks, and also